Hey everyone, today we wanted to talk about some quick mortgage hacks. I'm not a mortgage broker, we're a real estate team, but people always ask about these. And this changes by the day, but there are some real simple things that people can do. Whether if you already have a mortgage, there's some things you can do. And then if you're getting a mortgage, there are some things you can do as well. So we want to talk about some of the real simple ones first. And then towards the end, we'll talk a little bit more about some creative ones that you can do if you're getting a mortgage and things to look at. 30-year mortgage at 6.5%, you're going to pay about $382,000 in interest over the 30 years. On a 15-year mortgage, you're only going to pay about $170,000 in interest over the life of the loan. A lot of people will look at the interest rate, and again, it matters because it matters for your payment. But if you're truly looking at the wisest investment over the entire length of the loan, again, it's the same thing. And not most people don't realize that. So you're building equity quicker without question in a 15-year mortgage. Quick mortgage hack. If you already have a mortgage right now, if you pay one extra payment per year, you can go from a 30-year mortgage down to a 24 years that you'll pay it off in about 24 years. If you want to make one extra payment every quarter, you'll go from about a 30-year mortgage down to a 19-year mortgage. And again, that's a big deal. If you have kids in school and then once they're off to school and they're out of college and then your house is paid off, people see, people hear people joke about they get a pay raise once the kids are off the books, but you can do that with your mortgage as well. Another option you could do is do bi-weekly payments. So instead of doing one monthly payment, you could do a bi-weekly payment paying 26 times a year, and that'll take off about 4 or 5 years. So that's actually a really good, simple thing that people could do. Another thing we have people do just to look at too is make sure you're reviewing your mortgage every 2 to 3 years because sometimes they can up that servicing fee, and most people never check their mortgage. And you want to make sure that they're not doing that. So check into that. You want to check into that for a couple different reasons, but that also gives you the opportunity to look at if rates are better and potential refinance. Another idea that's just very simple, you can always refinance your mortgage, so keep that in mind. You're going to want to look at the fees and what that looks like and how long it takes you. Sometimes you can get less expensive refinances and sometimes you can't, but you want how long is it going to take you to recoup the fees that you're adding to your mortgage. So be smart about that. But right now, we have a lot of people still looking to buy houses because they don't have as much competition right now, and they know if the rates do go down, they can refinance and they're good. And if they don't, then they've locked in a good rate. So keep that in mind. Now I want to get into some creative opportunities on what you can do on rate buy downs and when it makes sense and when it doesn't. Here's what that means. You're about to make an offer on a house, and maybe you can, whether you're going to do the rate buy down yourself, sometimes you can negotiate it. How long has that house been on the market? How is it priced? What does that look like? How motivated is the seller? Sometimes you can get them to buy down some of your rates. The question is, does it always make sense? But we'll look at that towards the end. But 1% of the mortgage, if you want to buy it down 1%, that equals 4 points. So 1 point is a quarter of a percentage rate on the mortgage, right? So if you wanted to buy down 1 point, costs about 1% of the loan. Here are the quick details on that. If you wanted to go from a 6.5% interest rate down to a 5% interest rate on a $500,000 mortgage, in short, all that would cost you or the seller or a combination of is about $30,000, which is a lot. Again, this is if you want to go a full point and a half, a full 6.5% interest rate down to a 5% interest rate. I can tell you this is what a lot of people are doing right now is a lot of people are looking up and going, you know what? If interest rates go down, I can refinance at the time. So let me just get money off the house if I can negotiate that. And then we're just going to look at this later because there is a good chance maybe that does go down. And again, they're not having to compete as much right now, so they're loving this. If you haven't seen my video on 2-1 buy downs and 3-1 buy downs, that's a good short-term hedge on what you can do, and you're kind of banking some money to the side towards a refinance if that happens. So go watch that video. We have some sellers both in residential and commercial, and probably more in commercial, willing to do owner financing. And so that also gives you an option on what you can do. Sometimes they require more down. Sometimes they have a higher interest rate. Sometimes they will require less down and kind of a middle interest rate. So That gives you options for both your primary residence, but investments too. Sometimes when you get so many investments, owner financing gives you an option. If you have a realtor and you have an attorney, and the realtor will generally hook you up with an attorney for this, but we're also seeing contract for deed. And I'll do a whole nother video on that another time, but that gives you options on how you can get a property, how much down, and what that looks like. Another option on that side is there's assumable mortgages. There's not as many as there used to be, but there's some people who have an assumable mortgage. And I can tell you how all those work as well. And so using an old interest rate, normally they're qualifying assumable if you can find any of those, but it's nice to be able to see what's out there and just know what those options are. We are seeing people doing first and second lien options. And there's strategies for this. One, you can just do, hey, first lien is coming in at 80% of the loan, and that's not your interest rate. That's how much it is, and maybe 10% for the second one, and then you're just putting down 10%. The reason people would do that is, let's say they have some equity in their house and they want to sell their house and later it sells, then they can take that equity and just pay off maybe the second lien. So keep that in mind. I also spoke with a lender the other day that has bridge loan options to where they say, hey, we'll give you this money, and if it's under this dollar amount, it's $0 down, it's a 5.99% interest rate, and you have to pay us back in 6 months. If it's over that, you might have to put 5% down or something, but there are bridge loan options also. We also have a different lender on our side that'll help you buy before you sell. So I've spoken many times about this before, but if you need something creative to where you need to go buy your house before you sell, we have ways that you can do that, and it just streamlines everything for you. And you can even turns you into a cash buyer. So if you need that for whatever situation, or let's just say you want to be out of your house before you put yours on the market, again, that's another option for that also. With an attorney, we've also worked different lease purchase options, meaning you're leasing it and then you're going to buy it later. Maybe people are working on credit, maybe they're waiting for income to come in, but we've seen those options as well. And so there are so many creative things out there. When you have a team behind you that's experienced, we can help walk you through all those different options. But as you can tell, I get super passionate about this. But if you have any questions on any of these loans or whatever's out there, let us know.